Welcome everybody. Yeah, I hope those online can also hear me clearly. Yeah, my name is Larry Yuen. I'm a full-time lecturer at Kaplan, responsible for both this CAIA and the CFA exam preparatory course. A bit of my background. Yeah, before I joined Kaplan, I've been in the banking, financial industries for about 20 years. So in the first half of this career track record, I was mostly involved in this capital market, corporate advisory. Yeah, then I move on to asset management and private banking in the second half. Yeah, and hopefully I can make use of my experience to help you to prepare for the exam. Yeah. Okay. Well, just roughly, yeah. Well, what we have prepared for tonight is a bit of background of the market. What do we think about the alternative investment industries? Yeah, and what is required in the market? Yeah, and then I will talk about this examinations curriculum. Yeah, what is included in the curriculums? Yeah, what is the breadth and the depth that we should expect when we prepare for the exam? A few slides that we used in the classrooms, yeah, so that to give you a feel as to what it will be like, yeah. And then I'll pass it to Joanne. Yeah, probably she will be ready to give you more details of CAIA. Yeah. Okay, first of all, well, as you know that alternative investment has been around for years already, and now it is not as niche as it used to be. Yeah, 20 years, 30 years ago, right? When we talk about these alternative investments in those good old days, yeah, it is very restricted to a very limited number of market participants. Yeah, both on the buy side and the sell side. Yeah, and now you can see much more participations from different sectors. Yeah. Okay. From the corporate, from the institutional investors, pension funds, retail. Well, not as much as the institutional investors, but some of the AI alternative investments are also made available to them, and also from the regulatory perspective, and also from the governments investing in the real assets. All this can be one way or the other put it under this universe of the alternative investments. And among our students, yeah, they also came from very different background. Yeah, and I remember some of those could be from the vendors of the hedge funds. Yeah, so they manage hedge funds monies, and some others could be on the sell side responsible for distribution. Yeah, and some others from the family office that they prepared to increase their alternative investments exposure in their portfolio. Yeah, and so all this are very mixed, and it's just reflecting that the participation from different sectors in AI is still growing. And then I would also like to give a bit of comment on the expectation on exam in that sense is some of the students come here in the class, they demonstrate pretty strong knowledge already. Yeah, as I said, well, some of those from the vendors that they are very familiar in certain asset class of AI. Yeah, mostly is in hedge funds, either hedge funds or private equities, and some others could be just like a blank piece of paper starting from scratch. Yeah, it's very diverse, right? Yeah, of course, if you ask me, is it difficult to handle this such a diverse class? It might not be that easy. Yeah, sometimes I have to keep my pace. Yeah, there bound to be sometimes that some students might think I'm going too fast, and some others might think I can go a bit even faster. Yeah. So it really depends on our class. Yeah. But anyway, I would say that for all the students in my class, yeah, there are bound to be some things that they have to learn. Even though for those already in the industries, for example, if they're already in the industry selling hedge funds, they are very familiar with the practice of the hedge funds, the operational details. But then again, later on, when you look at the curriculum, hedge fund is only one of the topics in the curriculum. Okay, and actually, yeah, according to the feedback from the students, it is not the toughest one. Yeah, the most difficult one is other topics. Yeah, there's some kind of what they call is foundation topics. Well, actually, if you didn't study before, well, I'm not saying that it is technically super difficult. No. Yeah, but yeah, given that we are all working in the daytime, yeah, and the time constraint is pretty harsh on us. Yeah, in preparing for the exam, going through so many different topics within 2-3 months, it could be a big challenge. Okay, later we will see. Okay, well, just some background here. I'm sure Joanne, later on, right? Joanne is the managing director from CAIA, yeah, and she'll come up later on. She'll give you much more details about the latest of the alternative investment industries. But here I just might be just a preview, right? Yeah, about the growth of the AI in the past 1 or 2 decades here, right? So as you can see that, yeah, as a percentage of the investment universe, right? Yeah, if you look back from year 2004, yeah, accounting for about 6%. Well, 2018 might be 2021 nowadays. Well, I would say it's around 13-14% of the total universe. Yeah. Well, in terms of the percentage, the growth of the alternative investment has been quite spectacular, apart from the past couple of years. Because in the past 2 years, you see all these European, US stock market, they have very good returns, right? Very good returns, right? So relatively, the traditional investment universe has increased quite a lot in the past 2 years. Yeah, but if we take a longer time horizon, yeah, you can still see this growth is very significant, and the growth is expected to continue. Yeah, expected to continue. And here's the breakdown. Yeah, the breakdown of different traditional assets and the alternative assets in the investment universe. So as usual, the mainstream AI, yeah, we always talk about PE, private equities, and hedge funds, right? And but the growth of the AI I just mentioned, yeah, properly is coming from the other areas. Yeah. Well, private equities is still a strong growth area. Yeah. And now we put the private equities and private debt together is termed private capital. Yeah, a lot of these investments have gone into the private capitals instead of the public equities. Yeah, you can see later. Yeah, but apart from this, well, the real assets, infrastructures, is also a strong growth area that we are looking at. Yeah. And the purpose, well, basically, when we make investments, everybody's making investments want to make money. Yeah, that is the whole objective of the investments. But then again, if you move on to take an institutional perspective, right? We're gonna be more fine-tuned as to our investment objectives. Why do we invest in AI alternative investments? Okay. It has pretty strong diversification. Yeah, that is something that most of the institutional investors are looking for nowadays. Yeah, because when we say that in the traditional investments world, we are facing a low yield environment and very rich valuations. Yeah. And that forced a lot of institutional investors, for example, pension funds, looking for alternatives. And that is the main reasons why most of the people are expecting strong growth in the alternative investments, because they provide diversifications. And the other things, which I'm not sure what is your view on inflation, but inflation is definitely one of the most controversial topics today, right? Whether we are heading towards a stagflation year next year, or whether the inflation is just transitory. That is what Jay Powell has always said, and also Yellen. So it is very controversial. But if we have any concern on this area, inflation, alternative investments can play a big role here. If people start to invest for inflation hedge, probably there will be more capital flow into the alternative investments area. Okay, I think this too makes it very different from the traditional investments. Of course, just like the traditional investments, when you make investment in the alternative investments, you try to enhance your performance, get more returns. It could be in terms of capital gains, it could be in terms of the yield, generating income. Generating income also very important, because if you look at the bond market nowadays, I think it's still more than half of the sovereign bonds generating sub-zero yield. Okay, so all this background is very beneficial to the growth of the alternative investments in the coming years. There's a little bit of marketing for this CAIA, CAIA. I leave it to Joanne later, and she will talk to you about this. Benefit, as well. But I just want to say a few words here. Personally, I'm a member of the CAIA for a long time. I'm one of those, how do they term it? I'm one of those CAIA members in Hong Kong that I joined the association as the first batch. So all along, I have participating the conference, the meetings, the seminar, and I personally, honestly, think that is very useful, and very importantly is it's very updated. I think that is understandable, because when we talk about alternative investments, it is kind of the new types of investment ideas in the market. Okay, well, in a way, it put less focus on the traditional investment market, less on these valuations, models, but more on the new types of investments available in the market. Although those new types of investments are not yet included in the curriculum, but I think CAIA has made a very good effort, to keep the members and the candidates informed, as to the latest trend, in the market. Membership growth, just like the market, the members in CAIA has grown quite substantially. Okay, coming to the curriculum. This is for level 1, and the next page is for level 2. But let's focus on level 1 here. Is there anyone here going for level 2? Okay, let's focus on level 1 here. 1, 2, 3, 4, 5, 6 chapters here. Starting from the first one, professional standards and ethics. Professional standards and ethics, well, basically, it's the rules and regulations from that we impose on ourselves, voluntarily, And these are common standards and ethics applicable to CFA members and also to CAIA. So CAIA make use of, or maybe I can say leverage on these professional standards and ethics formulated by the CFA institutes. And just holding up the same standards, on the members and the candidates when we perform our duties for our employers and clients. So this will be quite worthy in a way, yeah, a lot of these standards, guidance, recommendations, yeah, you have to figure out how to comply with these standards and ethics, and what kind of acts, behaviors might constitute a violations of these standards, or just like laws and rules. And then the next one, yeah, is the one that I try to refer to, the sessions that my students in the past said it is most difficult. Yeah, it's introductions to alternative investments. Well, it doesn't tell you much about the content, right? Yeah, but here it is very broad, comprehensive topics, starting from an overview of the market. Yeah, what do we mean by AI? Yeah, who are the participants in this market? What kind of products that you can find in this market, and how is it regulated by the governments? And then it move on, yeah, to some theories on valuations, like fixed income, yeah, about the time value of the money, and then there are some statistical theories on probabilities, on hypothesis testings, and also it touched on the derivatives, yeah, about options, forwards, some of the pricing model, not in very much details, but just enough, yeah, to keep the members knowledgeable enough to understand the products. Okay, we are not going to be a product structurer. Yeah, we are not going to devise all these different pricing model. No, yeah, no. So let me just take a step backward here. I would say that once that you got this CAIA charter, it doesn't mean that you got the technical capabilities, yeah, to do the pricing model. You have to do something else, okay? But you have enough knowledge to cover all types of major alternative investments, yeah, okay? So, but that is broad enough, yeah. In this introduction to AI, yeah, it covers quite a lot of things that you have to go through in about 2-3 weeks, yeah, yeah. Because in our preparatory course, to cover these topics, yeah, we will spend about 5 to 6 weeks, all right? Okay, yeah, so for the introduction to alternative investments, probably we spend about 2.5 weeks, yeah. And we try to go through all the major points, yeah. And here I would say, let me, oh, that's the details of the exam pass rate. Well, anyway, let me go back here. Yeah, here I would say that in this about 6 weeks times, yeah, we will go through a lot of topics, but then again, it is not a cram course, right? I don't push my students to remember, yeah, the materials in the curriculum. Yeah, of course, you still have to do a bit of a memorizations. But apart from the memorizations, yeah, I try to explain, understand, let my students to understand what is going on. That is the whole purpose. As if you look at this, the learning outcome of the curriculum, most of this learning outcome requires you, yeah, to demonstrate understanding. Yeah, so you have to understand. Yeah, some of this might go a bit more in the technical details. Some others might be a scratch on the surface first, and you'll move on to learn a bit more at level 2. Yeah, but anyway, yeah, we have to understand the materials before we can apply it. So just memorize is not enough, okay? Apart from some of these could be some kind of a definition type of questions. So for those questions, yes, yeah, you have to remember a bit of the details. Okay, that is level 2. That's the price. And yeah, I'm not sure if you have already registered for the exam yet. This early bird window just passed, right? So which ends on the 15th of November. Okay, but the standard registration window has started from 16 November to February next year. And then you will have the exam window. For level 1, it is the first 2 weeks in March. So the schedule of our preparatory course for level 1 start in the first week of January next year. Okay, from January to early February. Yeah, early February. And then we will have a mock exam. Yeah, after a mock exam, we will have a mock review, and all this will end sometime in the middle of February. So when you finish all this, yeah, you still have about 2 weeks, 2 more weeks, yeah, to work on your weakness. Okay, yeah. So that is one of the purpose for the mock exam. You go through the mock exam, do the exam in a very similar environment under the time constraint, and see which area you still have to work on, so that you have 2 weeks to work on before the actual exam. Okay, passing rate, level 1, level 2, roughly around 50%. Okay, Kaplan. As I said that, there are a lot of materials included in the curriculum. Yeah, some of you might be very experienced. Yeah, some of you might be just at the beginning. Yeah, but what we here in Kaplan can help you is to expedite your study. Yeah, because there are a lot of materials. Yeah, we try to help you to go through the materials in a speedy way. Yeah, but not just memorize, but also understand. Okay, so that is what I mean by expedite your study. Yes, some of you might be, okay, I try to study by myself. Okay, fine, we can just provide the material. Depends on your background, your resources, how much time you can devote it to the materials. Yeah, then you can pick and choose your own learning path. Okay, yeah. Okay, these are different types of ways to prepare for exam. You can come to the classroom, you can just look at the video on demand, or maybe you can just look at the materials, and you can put it all together. And again, I leave it to my colleagues later. She will come in to explain to you all these different product offering, yeah, so that you can pick and choose the way that you prepare the exam. Okay, just a few more slides here. Yeah, just to demonstrate. Yeah, some of these materials covered in the curriculum, and I have selected these slides because I used to have the questions from my students asking, is it a very quantitative, demanding exam, CAIA? Yeah, if I don't have any mathematical background, might be studying most of the arts subject in the past, would it be very difficult for me? So here I will show you, yeah, some of these materials, which I would say it is quite quantitative, yeah, in the curriculum, yeah, to let you have a feel, yeah, see whether you feel it is too much or okay, yeah, for you. So firstly, it's about the measures of risk and performance, right? So here we talk more about risk. It is also one of the topics included in the session of Introductions to Alternative Investments. So here, for this, we are asked to demonstrate knowledge about this measure, value at risk, okay? So value at risk is one of the risk measures. When we say risk, that means the performance of our investments might be different from our expectation. That is what we mean by risk, okay? Yeah. So it can be measured by different way, depends on how you set your expectation. Okay, yeah. So a very generic term for risk is standard deviation. Yeah, any one of you, if you study math in the secondary school or maybe in the university, yeah, this is the general term used for risk measures. But apart from the standard deviations, volatilities, we have this value at risk. And in a way, value at risk is also relying on the standard deviation measures to measure risk. And here, coming back to the exam, here we have to demonstrate the knowledge on these measures. So we have to understand what it is trying to measure. Yeah, what it is trying to measure, yeah, of course, there will be a bit of calculations. Yeah, but more importantly is to understand what is involved in the calculations. What would affect this measure to make it bigger or to make it smaller? Okay. Okay, after understanding this concept and do a bit of calculations, then you can look at different methods. Firstly is a parametric, and later on some special situations using historical data and Monte Carlo simulations. So we don't have to do all calculations for all these different methods, but we have to understand, yeah, this is a measure, but these measures can be applied in different ways using different methods. Okay. Today, of course, I don't have all the time to go through all these different methods, but to tackle the exam, firstly you have to understand is the requirement. Yeah. After that, yeah, then we'll go through this one by one. And just talking about the concept first, for the value at risk in the class, yeah. Here is a bit difficult because I just pick these slides as an example. Yeah. And in the class, before we talk about these measures, we already talked about some of these basic statistical concepts like PDF, the probability density function, and the CDF. Yeah, that kind of things. Yeah. Different kind of distributions. But without going into these details, let's just focus on the concept here. When we talk about risk, yeah, the value at risk, it measures the maximum loss over a specified period with a specified probabilities. So for example, here is a 95%, which is the confidence, 95% confidence, within a certain specified period that our investment's maximum loss is so much. And that is the VAR here. Okay? Yeah, that is the VAR here. So when we work out this, well, no matter what kind of probability distribution that we are talking about, yeah, we have to specify two things. The first is how long are we talking about? The second thing is the probabilities or the confidence that we want to talk about. So based on these two things, yeah, and also the probabilities distribution assumptions, we work out these figures, and this is what we call VAR. And this is very interesting that on one side you call this VAR as the maximum loss, and on the other side you can call this VAR as the minimum loss. It depends on how you tell the story, right? Yeah, if you want to quote this 5%, which is the significance level, yeah, based on this 5% significance level, the VAR represents the minimum loss. Okay, that means you might lose more than this VAR. Okay, so this concept can be presented as a maximum loss or the minimum loss. Depends on which way you look at it. And if we really want to do some calculations, yeah, based on certain assumption of the distribution, we just put the two specifications together here. The first one is the timing. How long are we talking about? In 1 day, in 1 week, or in a month? The second is how much confidence, which is the specified probabilities. Okay, these are the two specifications. Yeah, we should be able to find in the questions. Yeah, once that we got this, we should be able to work out the VAR in percentage terms. If we want to work out the VAR in dollar terms, we have to multiply the value of our portfolio as well. Okay, so that is the last bit of calculations. Okay. For example, yeah, here we have the value, number of days, that is the specified time period. And also here, It is the level of confidence that we required. Okay. Then you do the calculation and get the answer. And of course, from this calculation, you see that the higher the level of confidence required, the longer the time period concerned, the larger will be the VAR. Okay, so that is the relationship. Okay, we are also talking about the more details in the VAR during class. And just one more thing to demonstrate is the quantitative requirement in the exam is about the derivatives. Yeah, we also need to understand options. Yeah, option is the building blocks for most of the structured products. Okay, we have to understand the characteristics. If you long, that means you buy an option. If you short, you sell options. The options can be a call option, put options. Okay, so these are the basic building blocks. So this is the payoff, for different positions. If we are talking about you long, that means you're holding a call options. That means you have the right to buy the underlying securities at the strike price. Here is the strike price. So if the underlying asset price increase, okay, you make profit, all along. But if the underlying asset, is below strike, on the other side, your downside is capped, right? So that is the basic characteristic of the call options. Okay. And similarly, we'll talk about different position. Earlier on, you long a call. Here, you short a call. So that is a mirror image of the earlier diagram. And now we have a put. You long a put. You have the right to sell. Okay, the lower the underlying price, the higher is your profit. Okay, that is the flip side. Okay, but of course, if the stock price goes up, you lose out a little bit. And that is the put premium. Okay, by understanding all these basic features of the put, call, long, short positions, then we can put them together. Depends on what you want. Or might be depends on what your clients want. Okay, then you can structure the product by putting different options in the product. Okay, so for example here, there's a strategy called cover call. That means you have a long position of the underlying, which is, for example, a stock, and at the same time you sell a call. You sell a call, why do you do that? Because you think this upside might be limited. You don't think the stock price will go much further, and therefore you sell a call. Your upside is capped. Your upside is capped. But at the same time, if the stock price doesn't go much higher, you earn the call premium. Okay. So all these option strategies, we have to go into the motive. Why do we do that? Do you want upside protection? Do you want the premium income or the downside protection? So all these different strategies. And also, might be sometimes you have a very particular view on the market. Then we have these spread strategies. The spread strategies like here, you can make profit in a range of the underlying prices. All right. If the price goes up within this range, you make profit. If the price goes up much further, your upside is capped. So it doesn't matter because I don't think the stock price will go up that further. Okay? So if I'm so good at the market, right, I will adopt these bull spread strategies. And similarly, you can do a bear spread. And also, during the class, we have some questions to go through to make sure that all of us are at the same pace. Okay? So for example here, if we have some position, which is a debt position on a commodity producer, Yeah, so we are afraid that the producers might default. How can we do the hedge with the derivative? So that type of questions we'll go through in the class. Yeah. So here, maybe I don't have the time to go through in details, but I can give you the answer here. Any questions? I don't know. Joanne? Is Joanne back yet?
Hey, hi there, Larry.
Hi. Yeah, you're back.
Hi there. I'm so sorry. Forgive me. I've had a bit of a personal emergency here in the UK. I'm actually not in Hong Kong at the moment. I'm with my mum. So in the spirit of being very transparent to all of those there for today's lecture, my personal apologies to each of you. But I know you've done a great job, Larry, of wandering through in a very thoughtful way that great overview of the sessions and what to expect. I'm very happy to take steer and share my screen and walk us through the introduction to alternative investments, if that's helpful at this point, Larry.
Okay. So I just pass it to you then.
Q&A.
Okay.
Okay. Again, to each of you, I do apologise. Timing's been a bit interesting, but I'm always delighted to have a chance to join and be part of a Kaplan info session there in Hong Kong. Ordinarily in person, but obviously at the moment with all the different things happening, that hasn't been possible. So I'm dialing in from my mum's kitchen in the UK. So good to see you all and good evening. Respectful of time, I'll wait for Christy to kind of pip up and say, Christy, may I take 15 more minutes? Is that okay? Christy or Larry, if you could give me some steer on how much time I may have, that could be really helpful.
Yes, no problem. You can have your 15 minutes.
I'm sorry, Christy, I spoke above you. Pardon?
It's okay.
Okay, so I'll take 15 minutes. So Larry's kind of taken us to the end of the presentation, talking about all things relating to CAIA. But I do want to just kind of take a step back and remind us why alternative investments are an asset class we should all be thinking about public versus private markets. A little thought about some of the career opportunities you might be thinking about or looking towards. And then perhaps I'll skip the CAIA examination part, because I'm guessing Larry did cover that. But again, I'll wait for Larry's steer. I don't want to waste your time by repeating things that we've already gone through. So the CAIA Association, we're a body that focuses purely on education around all things alternative investments. So we spend our time thinking about, considering, looking at what happens when an investment goes much more broadly outside of public markets and starts looking at all things within the alternative investments world. So what we do within the CAIA Association is really build a community of members who are industry professionals who all hold the qualification and the qualification of the designation, highlighting that they're experienced in all things alternative investments. Now, the reasons why focus on alternative investments, particularly in the last couple of years, has grown is suddenly investors thinking about diversification. If we go back to post the global financial crisis, my gosh, 12 plus years ago now, that was a market where you could pretty much buy anything, any stock, any bond, leave your money in cash and still make money. You had beta returns that were driving investment, beta returns that were driving returns. And therefore, the need to find other things going further up that risk return curve was generally not required. So you could buy equities, you could buy fixed income and be pretty happy with the returns that you enjoyed. With inflation coming, with returns diminishing within the long only, the public market space, we've had a real need to look towards the alternative investments landscape, private equity, venture capital, private debt, etc., as ways to diversify one's portfolio. Similarly, there's definitely inflation winds coming from north to south around the world, and investors trying to find a better source of alpha and a better source of returns for their portfolio. And what this has done is over the last 10 years, again, post that global financial crisis, my gosh, now 13 years, you've seen this momentous growth across the assets that are now run within the private market space. And that's set to grow to over $17 trillion by 2025. That's going to be a 60% increase. from where the assets stand as we exited 2020. And what's good news for us in Asia is a lot of that growth is going to be concentrated for us. Look at the CAIA from 2020 through to 2025. You're going to have a 25.2% CAIA taking us to almost $5 trillion of assets under management within the private markets forecast for the Asia Pacific. Now, PwC put together an excellent report, and with Christia's blessing, we'll share a link to have a read of it. But it's really highlighting quite where this growth is going to come from. And looking at those two big sectors there, infrastructure and private equity, is really where we're going to see that massive growth of new investment and appetite coming from both foreign investment LPs and indeed regional investment LPs. So the thing for the future for us in Asia, as far as private markets is concerned, is certainly looking very, very positive. And that obviously is stimulated by investor appetite or investor interest. So historically, many investors had very little diversified into alternative investments. They got all their returns quite happily from private markets, equity, fixed income and cash. And what's happened is more and more are diversifying and putting different investment portfolios into their overall asset allocation solutions for their long-term investment horizons. And increasingly, more and more investors have perhaps 2, 3, 4, 5 plus different types of alternative investments within their portfolios. Now, when we think about public or versus private, the reasons why public, as we've just shared, is looking quite so attractive is that CAIA, that growth, that opportunity, that access to alpha that isn't available within the public markets is being increasingly looked for and indeed wanted. And that's been stimulated by this. Increasingly, companies are deciding not to list. They're waiting a good deal longer to go public. And hence the new economy has indeed gone private. When Google launched, or when Google went public and listed on the US Stock Exchange, they had raised just $25 million via private sources, like friends and family, connections of the business and the industry and so on. A very small portion, little slither on that pie chart there on the top right-hand side, a very small amount of money had been raised from private sources, and some $1.9 billion was raised when they actually went public. By the time you get to Facebook, they raised some, $2.4 billion from private sources and then $16 billion from public. But by the time you get to Uber, a complete reversal. So they took on $22 billion of private capital compared to what you saw as in that $8.1 billion from the public sources. And what that means is here, companies are choosing to stay private for longer. And therefore, most of that value, most of that upside, most of that return is sitting in that pre-IPO space. So it's not surprising that increasingly investors are trying to get access to that amazing growth before something lists. And we absolutely forecast and we believe we're going to see much more of that ahead. Look at Twitter, Uber, Facebook. Look at all those returns that are actually enjoyed within that private sector versus post that listing. And that's stimulating this. Investors plan to increase their allocation across all of the contributions to the private markets, be it private equity, be it private debt, infrastructure, natural resources, and indeed hedge funds are the kind of the big 6 buckets that make up the private market sector. Now, I think when we think about looking at a career within financial services, 10 years back, 20 years back, you could choose an asset class, you could choose a path, front office, middle office, back office, service intermediary, and choose to anchor oneself there for the entire duration of a career. Obviously now we're being encouraged to have these things called T-shaped skills, a broader range of competency around a core competence. And now anybody entering financial services does need to have a broader comprehension and familiarity. And that, I think, alone is where a great career opportunity is going to come. So if you're working today in the public markets and want to expand skills to look more towards the private markets, I think is a good investment in your time and your resources to start reading, learning, exploring, networking and meeting people to try and get access to some of this upside. So absolutely great things are going to happen across the whole private market landscape. The other big area that I think is really exciting, and particularly when we move away from this whole defined benefit scheme that we have out of the Americas, where You work for your career, you stop working, and a check was posted to you every month that will therefore seek you, kind of keep you through your retirement. That defined benefit was very much set when you retired from your job. Those days are pretty much numbered. It's all about your contribution. We've got to take much more personal responsibility for how our long-term financial health is going to look into our dotages. So that whole access to investors, there's going to be some amazing things happen within the ecosystem as retail investors wake up and continue to diversify and democratize their access to get investments into what has historically been club deals or access to very, very large sovereign wealth funds or very, very large institutional investors. So access to investors, the retail market plan, and that high net worth individual, etc. We're going to see some great things happen there. ESG, my word, I don't think we can pick up a newspaper without there being something, and importantly so, where we don't look at all things environment, social, or governance. Increasingly, investors are writing or voting with their feet. Just recently, CAIA, we put out a report ahead of COP26 on climate change. I was lucky enough to interview 20 or 30 large LPs across Asia, asking them about their thoughts on ESG. And one thing that we hear continually is investors are going to demand better from their fund managers. They're going to demand much, much more today and tomorrow and next year than they ever have required of that investment moving forward. They can change things and they want to change things. So the career opportunities within the ESG field, having a competence, having a capability, having a qualification or appetite and interest, I think is going to be really, really interesting. And again, particularly in Asia Pacific over the couple of years in front of us. Now, if you're interested, CAIA has an online 1-hour webinar where you can learn the fundamentals of ESG. Again, with Christy's blessing at the end of today's session, we'll share a link so you may actually download and access this 1-hour resource. If you'd like to learn more, do please have a look at that. I think you'll find it quite helpful and indeed quite informative as well. The other big area where careers, I think, sit will be around all things valuations. Now, in the public market, you phone a stock exchange, you phone a broker to get a price for the asset which you own. It's a listed, mostly market. You've got if it's liquid, you can get a price, you can get out of that transaction in a very easy, very mobile way. Obviously, when you board a port or you board a ship or an airport, getting a valuation for that is something which for many investors, they're kind of quite worried about. And one of their biggest issues is, how do I value this asset? How do I get a reflective valuation of my entire portfolio? I can price my equities, I can price my fixed income, I can add in my cash, but I've got all these other kind of private market investments. How do I get a reflective, accurate valuation on those investments? And so across most of the pillars here, real estate, private equity, private debt, or infrastructure, investors are concerned about how those assets are being valued. And I think from a careers opportunity perspective, looking at this as a focus or giving this some further thought, I think would be a really smart move to take. Maybe kind of side by side to ESG is D&I, or diversity and inclusion. And it's increasingly being looked at as being things called diversity, equity and inclusion. And again, we know broader range of skills and competency within a team ordinarily deliver and increasingly deliver better outcomes. So if you have all of one particular body of people in a particular room to do a certain task, they're going to deliver a particular return, but put a few more from different backgrounds, different experiences, different educational environments, you're going to very, very, very different focus. And so I think all things across diversity and inclusion equally is where there's going to be some really interesting opportunities as we think about careers over the months and the years in front of us. And finally, data. Now, a couple of years back, it was unheard of to have a data scientist working on a trading floor or working in a portfolio management office. You can't go to any of those offices pretty much these days, and there isn't a data scientist sitting there somewhere trying to fathom out what are the trends here? How can the algorithm help me find something different? How can this data be mined in a different way? And so I think the use of technology within the financial services sector, particularly in the private market sector, is only going to grow exponentially. And as this chart here shares with you, that growth has already been significant, and more of the stakeholders within the private market sector are recognizing this, and they're building out these tools and these techniques. Now, I do want to turn the subject a little bit to the CAIA qualification, but again, Larry, I appreciate I wasn't able to hear your earlier part of your session. Before I talk about CAIA, had you taken the time to go through most of this already? Or should I pause here and we could move to, I can sum up and then we can move to questions and answers?
Well, we did touch on the CAIA examination, but I think it is better that you can sum it up for us.
Okay, that's great. Well, again, I didn't have a chance to listen to Larry's presentation, which I apologize for, but my task this evening was to set the scene and share why I think the private market sector is one to watch and one to be thoughtful of and towards. If you're looking at your skills and reviewing how your understanding, comprehension, confidence and competency within the private market sector sits, I think having a qualification to help you differentiate your skill set is really, really important. And that's really where the CAIA Charter, our designation, can help you. I will just go down to this final slide, which is where I think if you'd like to learn more about CAIA or would like to be within our ecosystem, we run an awful lot of information services and sessions, not just these and not like these that we work here with Kaplan, but there's a lot of different initiatives that we work on by way of content, information, connecting professionals that work in the sector as well. And we really hope that you will take the time to have a little bit further look into all things CAIA and hope that any questions you have, both between Larry and myself here, we can address. I'll finish as I started by apologising for the rhythm of this evening's session not being quite what you perhaps expected or signed up for. For that, I do apologise. I'm very, very happy to be connected onto LinkedIn. I will be in quarantine shortly, so I'm very happy to schedule a one-on-one with each of you if that's helpful to go through any of the questions you'd like to address. But I am mindful that the rhythm of this evening's session was affected by my contribution here, so I apologise for that. But maybe I'll stop there, Larry, and invite you back, and we can therefore address any questions which we might have from those who are still in attendance. To each of you, thank you for listening, and again, thanks for your patience. I appreciate that.